Wall Street's mixed signals, earnings, trade wars, and market reactions. Wall Street's major indexes concluded the day with a mixed performance, reflecting a split in investor sentiment as earnings reports varied widely, while crude oil prices fell ahead of an impending trade deadline. Summary of key points. The US dollar remains weak as traders await clarity on tariffs. Gold prices continue to rise due to a softening dollar. Hopes for a US-EU trade agreement diminish as the deadline approaches. Oil prices decline amid concerns over demand. On July 22, 2025, in New York, the Dow Jones Industrial Average saw an increase, while the Nasdaq Composite experienced a decline. This fluctuation occurred as investors processed a series of mixed earnings reports and recognized that President Donald Trump's ongoing trade conflict is beginning to impact corporate profit margins, particularly as the deadline for negotiations draws near. The S&P 500 index ended the day with slight gains, but the underperformance of technology stocks pulled the Nasdaq into negative territory. Gold prices have continued to rise, benefiting from the weakening dollar, and U.S. Treasury yields have decreased for the third consecutive day. Robert Pavlik, a senior portfolio manager at Dakota Wealth in Fairfield, Connecticut, noted investors are seeking additional catalysts, and we are seeing cautious remarks from various companies. There is a lot of mixed guidance amid the uncertainty surrounding tariffs and the overall direction of the market. As the second quarter earnings season progresses, nearly 20% of S&P 500 companies have reported their results, with 79% surpassing analysts' expectations, according to data from LSEG. Analysts are projecting a year-over-year earnings growth of 7% for the S&P 500, a notable increase from the 5.8% growth forecasted on July 1. However, the repercussions of the trade war are starting to manifest in corporate earnings. For instance, General Motors reported a 32% drop in its core profit for the second quarter, largely due to significant tariff costs that impacted its earnings by $1.1 billion. As the August 1 deadline approaches, the likelihood of a trade agreement between the US and the European Union appears to be diminishing. This has led EU member states to consider potential anti-coercion, retaliatory measures. U.S. Treasury Secretary Scott Bessent announced plans to meet with his Chinese counterpart to discuss the possibility of postponing the August 12 trade talks deadline, as the two largest economies in the world grapple with issues related to technology and rare earth materials. Chuck Carlson, CEO of Horizon Investment Services in Hammond, Indiana, commented, "These negotiations are quite typical, nothing significant occurs until it absolutely must. Usually, resolutions emerge right at the deadline, or the deadline is extended." He added, on the flip side, Trump will eventually need to follow through on his commitments. If he fails to do so, he risks losing credibility, and his negotiating power may diminish as people begin to doubt his intentions. In terms of market performance, the Dow Jones Industrial Average rose by 179.12 points, or 0.4%, closing at 44,502.19. The S&P 500 increased by 3.99 points, or 0.06%, to finish at 6,309.59, while the Nasdaq Composite fell by 81.49 points, or 0.39%, ending at 20,892.69. Globally, MSCI's index of stocks rose by 0.07%, while the Pan-European Stocks 600 index decreased by 0.41%. Emerging market stocks also saw a decline, falling by 0.31%. The dollar continued to weaken in a subdued currency market, as investors awaited any signs of progress in trade discussions ahead of the August 1 deadline. The dollar index, which measures the greenback against a basket of currencies, dropped by 0.5% to 97.36, while the euro rose by 0.49% to $1.1752. Against the Japanese yen, the dollar fell by 0.56% to 146.56. In the cryptocurrency market, Bitcoin increased by 1.98% to $119,320.90, while Ethereum decreased by 2.41% to $3,668.31. U.S. Treasury yields are on track to decline for the third consecutive day, following a rally on Monday. The yield on benchmark 10-year notes fell by 2.8 basis points to 4.342%, while the 30-year bond yield decreased by 2.6 basis points to 4.9111%. The yield on 2-year notes, which typically aligns with Federal Reserve interest rate expectations, fell by 1.9 basis points to 3.833%. In the commodities market, U.S. crude oil prices dropped by 1.47% to settle at $66.21 per barrel, while Brent crude fell by 0.9% to $68.59 per barrel. Spot gold prices rose by 1.07% to $3,431.87 per ounce, and U.S. gold futures increased by 1.15% to $3,441 per ounce. This report was compiled by Stephen Culp, with additional contributions from Tom Wilson in London and Ankur Banerjee in Singapore, and edited by Deepa Babington, Rod Nickel, and Daniel Wallace. ***, what are your thoughts on the current state of the markets? Do you believe the trade negotiations will lead to a resolution, or are we in for more uncertainty? Share your opinions in the comments below. ***. Stock market update July 22, 2025, S&P hits record, Dow rises, Nasdaq dips. Imagine a day where the stock market sends mixed signals like never before, and that's exactly what happened on July 22, 2025. While the S&P 500 barely scraped together a record close, yes, you read that right, the Nasdaq Composite took a surprising tumble. But here's the twist. It all came down to one major player, AI stocks. The Nasdaq, heavily weighted in tech, plunged 0.4% as investors dumped shares in Nvidia and Broadcom, breaking its 7-day streak of record highs. Meanwhile, the S&P 500 inched up 0.1% to hit a fresh peak, thanks to broader support from non-tech sectors. The Dow Jones Industrial Average joined the party, rising 0.4%, or 179 points, and inching closer to its December 2023 record of 45,014.04. Small-cap stocks stole the show too, with a strong rally that left analysts wondering, are investors seeking safer, undervalued bets amid tech volatility? But wait, the real question is, can the S&P's record hold if tech giants keep stumbling? Some argue the Nasdaq's fall signals a broader correction, while others see it as a minor blip. And this is the part most people miss. Small caps often surge during periods of economic uncertainty, acting as a canary in the coal mine. So, is this a sign of a shifting market landscape? Controversy alert. Critics claim the S&P's resilience is overstated, propped up by a handful of stable stocks rather than genuine market health. Supporters counter that its diversity makes it a more reliable indicator than the tech-dominated Nasdaq. So, we ask you, do you think the S&P's record is a victory, or a red flag? Should investors brace for a Nasdaq-led downturn, or is this just sector rotation? Sound off in the comments, let's debate.